Hello, welcome to Advisory Services are important, but they need to be sold. I'm Peter Towers, Managing Director and founder of ESS BIZTOOLS. Welcome to this overview of issues confronting accountants and bookkeepers in supplying services to SME clients. How do you go about supplying those services? This presentation is being made on behalf of my company, ESS BIZTOOLS, and the Boss Factor Library, which is headed by Trevor Marchant. And we will be talking about the products and services that both organisations supply to assist accountants to be able to deliver the very important services that SMEs need. The Intuit QuickBooks SMB 2025 survey asked 500 SME participants from all over Australia to choose the option that best described their relationship with their accountant. They were given three choices. The relationship which describes the full service option was the key strategic partner. Intuit defined the key strategic partner as they are a key partner in our business and our go-to professional for advice, and they are extremely valuable to our business's growth and success. Let's read that again, because I think this is very important for accountants and bookkeepers to appreciate, because I think this is the rating you would want from a significant majority of your clients, wouldn't you? My accountant is a key partner in our business and our go-to professional for advice. And our accountants are extremely valuable to our business growth and success. And you could reword that, of course, and put your firm name into the definition when you're talking to your team to get them reinforced with the concept that this is the rating that you deserve to receive from your clients. But you will only deserve to receive that rating if you are conscious of the need to supply advisory services. Now, the result of this survey was very disappointing, and that's an understatement. Intuit reported that only 15%, 75 out of those 500 firms, indicated that their accountants were their key strategic partners. So 425 firms were not impressed that their accountants were supplying the highest level of service. This highlights opportunities, I believe, for accounting firms, that you can improve your image with Australian businesses so that you can achieve that rating. Because if you do that, you will be earning additional fees, because there's no doubt that advisory services generate additional fees from just straight tax return preparation work. But also it will help you with your talent attraction and talent retention within your firm, because your firm will be participating in the delivery of interesting and challenging work, which will appeal to your younger accountants. And in our promotions in 2 weeks' time relating to the Boss Factor Library, we will be talking more about the problems that are confronting Australian accountants based on the latest information being released on university participation in courses to do with accounting. This is one key area that you can undertake, which will help you to not only assist your clients, because many SMEs, thousands of SMEs around Australia need more assistance, but it will also help you with your talent attraction and retention. ESS BizTools has developed a wide range of advisory services to assist accountants to offer business-enhancing advisory services to SME clients, to help accountants gain recognition by their clients that you are their key strategic partner. And I look forward to being able to work with you to achieve that. Now, the Boss Factor Library, headed by Trevor Marchant, who has commented, the shift to advisory services brings with it the requirement to continually develop and manage opportunities that do not necessarily happen every year. As a result, a consistent pipeline process supported with professional selling skills will be the key to driving successful revenue growth, is what Trevor said. Trevor's been training accountants in the art of selling services for over 30 years. Prior to that, he was the sales training manager at Westpac. Yes, banks were having training 40 years ago, in how to sell. Took me a long time. In fact, I never realised that until I met Trevor Marchant 25 years ago, that bankers were being trained on how to sell. Trevor asks a question in one of his many publications: why professional selling skills? Why are they needed? And his answer is, it's simple. Advisory services are not bought, they are sold. And advisory services applies to all aspects of a business. Why are they not bought? Well, I think the answer that Trevor would give is that SMEs know they need something, but they don't know what it is. Unfortunately, our profession has concentrated in dealing with the SME market in particular over the last 50 years to basically deliver a service which embraced an annual set of accounts and an income tax return. From the start of GST in 2000, some additional services emerged because business activity statements had to get prepared. But our whole process for probably 85% of the accountancy profession, based on the Intuit survey, which said only 15% received the top rating. And I don't believe you would have got that top rating if you were not delivering advisory services. Because the SME sees no real value in the service that accountants all over Australia provide for the preparation of income tax returns. They pay you and they come and see you every year because they know they've got an obligation from the government. And if they don't do that, they will get fined and prosecuted by the tax office. We are trying to help you to be able to have clients who voluntarily come to you because you're going to help them improve their business operations. That's the difference between advisory services and compliance taxation services. So before starting a business is one of the key areas that ESS BizTools look at in our material, in our starter package. And we're going to talk more about our starter package later in this overview. Because we need to make sure that someone who's contemplating going into business has done some research before they resign from their current employment. You need to give them some guidance using a due diligence review process to decide whether they are ready and able to operate a business of their own. And what you might find from this overview is they haven't got enough money at this stage. And they might be better staying in paid employment for 2 years. I don't want to destroy the enthusiasm of people wanting to run their own businesses, but we need to be encouraging them to do it in a properly thought out way. And I'm very mindful of the report that the MYOB Managing Director produced and was published in the Financial Review nearly 2 years ago, in which he reported that MYOB had conducted a survey on 1,000 new members of their system as to how they'd gone in the first 12 months of their business operations. And he reported that one of the initial big problems that really slots into what I'm talking about here was that there hadn't been proper due diligence on a range of matters. And the first key item that he identified was they'd made no contact with suppliers. And they'd assumed that when they went to a supplier, they would be welcomed with open arms and would automatically be given a 30-day account. Quite a number of those 1,000 businesses found to their dismay that they were not given a 30-day account. They placed an order and that was accepted by the supply organisation, who immediately asked for a sum of money to be transferred into the supplier's bank account. In other words, payment up front. And when they objected, they got told, well, go and talk to another supplier, because that's our terms for all new accounts. Because suppliers have been caught by some people who were unable to pay their bills, and they've toughened up. And in the unfortunate circumstances we're in today, I think that toughening up is going to continue. Those particular businesses that MYOB were referring to in their cash flow or budget calculations, and I really hope an accountant didn't prepare them for them, but they should have, because you would have been alert to this and advising them. Make sure you've made contact with the suppliers. Find out that they've got the product you're after and that they will sell it to you, and ask for a 30-day account. And if they agree, get it confirmed in writing. But if they don't agree, at least your client knows. And that's one of the reasons I'm saying they might not have enough money to go into business at this stage and before they resign, like in their current position. Check competitors. I've seen people go into business with no idea who their competitors were. I've said, why did you do that? Oh, we're very confident in our ability. Well, it won't take too much effort to go around and look at the key competitors in your market or your prospects market so that they can establish. Because they need to establish if there's a market for their product or services. So what research have they undertaken? Have they perhaps worked in some of those competitors' businesses? Or have they observed what happens at various times of the day, and not just all at the peak period, because there's not many businesses can make enough money in their peak period that it covers their 4 weeks operation. So make sure that they've gone off and had a look at in the so-called downtime. How many customers are they getting then? How is your client going to compete with these people? What percentage of sales of these competitors selling on a credit basis? Because the next big problem that MYOB found was that a number of these new 1,000 people going into business had assumed they had to give credit to anyone that asked for it. So they ended up with a significant number of bad debt type problems because they didn't check the bona fides of these people applying for credit. But the other big mistake they made was that apparently they assumed that everyone would pay them on a 30-day basis. Now, we know that's not the situation. Just look at debtors' days outstanding. And I hope you are calculating every time you look at a set of financial accounts for your clients what their current debtors' days outstanding are. Because some people end up with very large figures. I've had one that the debtors' days outstanding was up around 110 days. And they never been told that figure before. And I inquired if the boss got cranky at times. When the bank manager rings, I said, I can understand why. So does your client or this person that's going to go into business understand how a debtors management system has to be operated? And you should be talking to about them and saying, well, we can install one. And if you're a subscriber to ESS BIZTOOLS, we've got a full, complete debtors management system, which you can badge with the client's firm name on it and train the person who's going to run the debtors system. Because that's a very important job, not the job to be given to the last hired person, which is what I find happens in a lot of businesses. And there needs to be clear understanding of what the credit terms are going to be. And the due date for payment should be clearly marked on each tax invoice. And there should be a follow-up phone call 3 or 4 days before the due date. Friendly reminder that your payment that you owe on such and such an invoice is due in 3 days' time. Gives people a bit of a prompt. Does the client believe they will require to employ staff? If so, how many staff? What are they going to do? What's their job descriptions? What's the payroll going to cost? And remind your clients or new clients that are looking at businesses now that they're going to have to pay superannuation basically at the same time they pay the wages. So that's another immediate cash flow effect. The client should prepare a labour manning document. I think all this should be being documented by the client. And it's important the client does this initial research because they might find this is way beyond what they thought would be involved. And they may talk themselves out of it. I'd also encourage your client to sit down and prepare their own budget and cash flow forecast. And then you review it. And invariably, I think you're going to be showing the client the things they missed so that they have a far better understanding of their business. I think one of the problems with small business in Australia, too many people are going in to run a business without having undertaken this preliminary research to understand what they're really getting involved in. And a lot of people have worked in government departments, but that doesn't mean they've run a business. In ESS BIZTOOLS, we've got a list of the normal duties in any business. The list exceeds 40 items. People who've worked in government and big businesses have been in little cubbyholes, in effect. They've only done certain work. We're now saying to them, go in, you've got to be the managing director, you've got to be the floor sweeper, you've got to be the emergency telephone number contact person, you've got to pay the bills, pay the wages, be the salesperson, be the marketing person, be a whole range of people. We need to make sure they understand it. So at the end of this research, due diligence process, the prospective client could sit down with you then and you could say, well, do you still want to proceed with this business? The key question is, does the business appear viable? Does the client have enough funding? Now, this is your reaction now. The client's going to present their research document to you, their budget, their cash flow. I think you've now given them your proposal, your quote, and they know that you're charging them for services. Because I think it's very important that you are very positive in this discussion with your client. Businesses do need a virtual chief financial officer. The failure rate, as reported by the Australian Small Business Ombudsman, is far too high. And it's because people are just walking out of their jobs and thinking that they can immediately run a business, even if it's in their trade. Most of them got no idea about preparing quotations, following up with debtors, analysing their figures, looking at their key performance indicators. One of those indicators need to be looked at daily in many businesses. The key budget documents that needs to be prepared, what we call the predictive accounting reports, budgets, key drivers, cash flow, projected balance sheets. And if they don't want to do all this, I'd be suggesting to them that they go and talk to someone else, because they're going to end up being a failure. And that's only going to cost you more money. Your bills won't get paid. It might be hard, but at times I think we've got to be a bit harder. We've got to apply what the top big end of town would do. But you could then discuss the results of the business plan and predictive accounting reports, because part of all this would be you've now developed a business plan for them. And out of that, the predictive accounting reports. They've got some documents that they can then be monitoring their performance against. They wanted to go into business. This is the full score of running a business. It's not just all socializing. And if they're running a bar or not sitting at the bar having drinks with the customers all day, there's a lot of work to be done. And there's probably no other person that's going to really tell the client that. This is how the operation needs to be run. And if you're supplying a virtual CFO service, doesn't have to be the top level of virtual CFO services. We've got some clients earning $120,000 a year from supplying those services to individual clients. But it might be $10,000 to $15,000 a year, and they need to be able to factor that into their business operations. It's nearly an essential cost, as far as I'm concerned. And that's what I'd urge you to take this approach. Let's move on. Buying a business. It's another area that ESS BIZTOOLS can help. And again, this is very early in the life, and it's part of the starter package. Buying a business. We're going to go through some components that I believe should be undertaken before a contract's signed. And most certainly, you shouldn't be saying to your client they shouldn't be signing contracts until they've got legal advice and your advice. So some of the key components that we discuss in our package on buying a business. The due diligence review with suppliers. I've just outlined that. Major customers. Who are the major customers? When do they pay? Who owns the premises? What's the deal on the lease of premises? Is there major restitution to be made at the end of the lease? How long to go on the lease? What's it going to cost for that restitution? How's the business financed? Questions you need to ask your client. Within ESS BIZTOOLS, we've got 60 separate papers produced, which all relate to buying a business. I don't know if you can expect the client to sit down and read 60 papers very quickly, but you need to be giving them an overview and giving them some of those papers so they can take away and read them and understand what's the issues. And there are different issues if you're buying a business. First of all, making sure you don't overpay. So the financial accounts need to be analysed by you. The net profit. There needs to be adjustments for salaries and rent, interest and other items. So if the vendor has got another business or another source of income and he and his son are working full-time in the business but no salaries are getting paid to them, it means the profit's being overstated. They own the premises and no rent's been paid. The profit is being overstated. So you need to dig down into those figures and give the client some advice so you can determine what the rate of return and the targeted return from this business will be. So that's some of the process that's undertaken. There's another key area to look at the team that's currently working in the business. Are they going to remain on to help the new purchaser settle into the business? Some people come to me and want to buy shares in a company. That's the basis. Be very, very, very careful. And I think as an advisor, you need to be very careful on agreeing to that. You need to do due diligence on that company. What agreements have they reached? What potential skeletons are there in the cupboard? Because once your client buys the shares, they're then responsible. So due diligence review on the company. We have a complete paper in our system to guide you on that process. And then the client's going to need setting up the systems for the effective operations of the business. Now, if the vendor's already got very good systems in place, I would not encourage your new client to tinker with them, because I've seen that happen and it ends up a mess, because the team that's working there is familiar with that system that's already there. If the client wants to change the system, well, perhaps in a couple of years' time, when they really understand the business. And it probably will take them that long to get that. So getting the foundations right when buying a business or starting a business is very important. And you need to make sure that running a business or buying the business that the client's thinking about fits their lifestyle. I've had situations where a guy come to me and said, well, I bought a new boat and I'm going to be going out in the boat 2 or 3 days a week. I said, hang on, you've got a 7-day-a-week business. Oh, yeah, but the staff can run it. Well, he got into difficulties in a number of ways. So we need to be realistic. And at times you've got to give some fairly tough advice to clients to make sure they understand. So all of the ESS BizTools packages that I've referred to there, which we're looking at people thinking about buying a business, and then what happens once they've bought it, are all available within the ESS BizTools starter package, which is featured in the package offer that I'm going to make to you shortly. So how to attract, convert, and keep the right clients? This is the question from Trevor Marchant. The most valuable skill any business owner can have is the ability to attract, convert, and keep the right customers. The measurable benefits of having a sales coach, and that's definitely what Trevor is and his wife Eve. A good sales coach helps you to improve conversion rates, raise average client value, shorten sales cycles. Discounting's unnecessary. Even a small improvement in conversion can mean a significant revenue jump. These are the tactics that you learn going through the sales training with Trevor and Eve. Most businesses rely on hope and personality. A coach helps you to build a defined sales framework, structured discovery conversations, clear qualifications criteria, a consistent follow-up system, very important, removes guesswork and creates predictability. Many professionals, especially accountants, struggle with the whole concept of asking for the sale. Somehow or other, we all think it's a bit ungentlemanly to be asking for a sale. Well, start doing advisory work and then doing consultancy in various aspects. You'll learn that that's part of the process. In fact, on advisory work, I think you should always give a written proposal to the client together with what the fees are going to be and get them to sign off on that. It's the best way to make sure you're going to get paid. Talking about money. Some accountants, strange as it may be, I thought money was our industry, but Trevor's saying they struggle with it. Handling objections, managing silence. A coach helps reframe selling as helping, which increases confidence and authority. Change is in the air. I agree wholeheartedly with what Trevor's saying. You already know that to achieve growth, accountants need to incorporate advisory services and consulting into the services suite. There's no doubt in my mind, and that's what I've been working towards for 26 years with the development of ESS BizTools. Accountancy compliance services have grown long in the tooth and are now thinly margined. The tax commissioner, who's now retired, but 4 years ago issued a very serious warning. Now, he was an ex-partner in a top 4 accounting firm. I think he had some sympathy for the accountancy profession. He gave a long-term warning. Things are changing. You need to change what you're doing. And this particularly related, I think, to accountants servicing the smaller end of the market, the bookkeeping market, and accountancy firms dealing with very small SMEs. And that's why we're featuring in this product offer we're going to make to you our starter package, which has been developed for accountants servicing that market. To provide clients the value they demand, you need to remain relevant and expand. All signs, Trevor says, point to consulting, especially in the business sustainability and growth-related offerings. Clients want right now, and in some cases need right now. According to the Ombudsman, at least 50% of small businesses are in strife in Australia. There's a whole range of people need help. For decades, accountants, and most likely your firm, has been relying on traditional accounting services. The annual engagement centred on tax and in some cases audit work. In many firms, compliance work represents as much as 90%, Trevor says. In fact, in my observation, some are a lot higher than 90, up around 97, 98% of the income is from the tax return process, tax advising, tax return. No one is arguing that you should drop doing tax work. What we're suggesting is using the new technology and the changes that the tax officer implementing, try to get the split lower. I've got some clients achieving 50-50 split between advisory and taxation work. You might want to work down to that, might take you a few years. But why not set a target that in 2026 you're going to try at least 80-20. And the following year you might look at 70-30 and so on. However, the shift to advisory services brings with it the requirement to continually develop and manage opportunities that do not necessarily happen every year. A lot of them do happen every year, but some big deals will be more spasmodic. It might be buying another business. It might be selling a business. That type of activity. It might be a major research and development project, which could lead into what I call the innovation journey, the steps that take place after research and development. And that might only happen every few years. As a result, a consistent pipeline process supported with professional selling skills will be the key to driving successful revenue growth. Please think about that. This is the background to the simple statement that Trevor Marchant and Eve Dallas have made. Advisory services are not bought, they are sold. Sold by who? By you. You say, I can't sell? Neither can most accountants before they meet Trevor Marchant and Eve Dallas. But at the end of that process, you will be able to sell confidently, and you will be able to inspire that confidence and ability into your accounting team. So the Boss Factor Library, let's look at it. It comprises the referral system, puts a simple referral by invitation method in place, which guarantees a continuous stream of quality referral. You get that material, you get trained by Trevor on how to use it. A lead generation system, very important, puts a unique lead generation system in place, a system that doubles as a retention strategy for your existing clients, increases their loyalty and encourages them to refer their clients, customers, family, etc. to your business. The loyalty factor puts behaviours and actions in place that help you create even more value to your clients, improving your client relationships and driving up your word of mouth. Sales management shows you how to sell. Not only your compliance services, yeah, you can sell them, but also opens the door to what Trevor calls the untapped multi-million-dollar advisory services market that accountants should be the key supplier to. And what Trevor's referring to there is this whole industry that's growing up of people who are not accountants or are not supplying accounting services, who are offering services to SMEs in a range of areas. The financial management type activities should be your turf. But accountants need to be in there. It's like a football game. You've got to get on the pitch and get hold of the ball and score goals. It's the same thing in the delivery of services to your clients. So the advisory services developed and delivered by ESS BIZTOOLS, we've developed the product packages, and the sales training resources developed by the Boss Factor Library will equip your accounting firm to offer an outstanding range of services to your SME clients, which we believe will enhance your firm's reputation with your clients and assist your firm to gain the recognition from your clients that you are providing a key strategic partner service. That's what we started this presentation with today. I think it's vital that you set that as your key goal. You're going to supply a key strategic partner service. To do that, you will require access to resources to supply advisory services at the level that the clients need and want. But you will also need the ability to be able to sell those services to your clients. And I think you really need Trevor Marchant and Eve Dallas's input to assist you on that journey. So the special promotional offer from ESS BizTools and the Boss Factor Library. The library access is an annual subscription of $70 per month plus GST. The coaching mentoring program for accountants costs $1,200 plus GST per person per annum. Some firms have 4 people, Trevor tells me, in their office undertaking this whole process so that they're all geared up to be able to sell services. Now, if you subscribe to these 2 packages for 12 months, you pay the subscription for 12 months, you will then get free access for 12 months to the ESS BizTools starter package, which I referred to in some of the services that are contained within it at the beginning of this presentation. So that's the special offer. Costs you $1,200 plus GST per person that you have in the coaching mentoring program for accountants. And you need the library access, which will cost you $840 for the year plus GST. And then you're underway. Once you're in the ESS BizTools system, you can upgrade to new packages. We have an advanced package, and on top of that, we have the financial forecasting package, which is our overall package. To subscribe for this exciting package that will really get you underway on the offering of advisory services and the marketing and selling advisory services, please go to www.essbiztools.com.au. Then click on Affiliate Packages, click on the Boss Factor Library, click on Subscribe to the Boss Factor Library Access, and then click on Subscribe to the Coaching Mentoring Program for Accountants. It's all there. You just click on the various sections as they come up on the screen. All that's done on the ESS BizTools website because we're marketing this overall promotion jointly on behalf of the Boss Factor Library and ESS BizTools. So please do that. Just go to our website, essbiztools.com.au, click on Affiliate Packages, and just follow through the process related to the Boss Factor Library. When you have completed your subscription, you will receive a notification from ESS BizTools that you've been accessed for the starter package, and within 24 hours, you will have access to that product package and we'll be communicating with you, and you will also be receiving correspondence from the Boss Factor Library about getting underway on the training program, because both sides are keen to get you proactive and into the marketplace arena to improve the quality of the services that you're offering to SMEs and to improve, probably quite dramatically, your selling abilities, so you can make sure your clients understand these services. Now, if you have any questions on any aspect of the material that I talked about today, please don't hesitate to contact me. Send me an email, peter@essbiztools.com.au, and I'll get back to you. Or telephone me, 0418 190 181. ESS BizTools packages are developed by me, an accountant. I've been an accountant for a long time, and my team have had accountancy industry experience. We look forward to hearing from you. Have a great day. Goodbye.